Another minister to be sworn into the new Abbott government tomorrow is Andrew Robb, who will take on trade and investment. Well, he's clearly keen to impress that at last Australia is open for business. But how much foreign investment is the right amount, and does it come at a price? Well, I'm joined in the studio by fund manager Roger Montgomery. Roger, welcome.
Thank you, Ticky.
Now, there's Andrew Robb, front page of the Financial Review, yes, grinning from ear to ear with sort of profits for foreigners.
And it's telling that he was standing in a Chinese takeaway shop, because if he's to be believed, he wants the Chinese to take everything away.
Well, I'm just thinking back to what Kevin Rudd said during the campaign, that he was anxious about foreign investment. You seem more than anxious. Your little piece you wrote today is called Wrecking Australia. Why?
Well, I had breakfast with Andrew Robb last year, and I came away thinking we're going to have more of the same. Basically, what the suggestion is that our strengths in Australia are agriculture and commodities, and we need to do everything to encourage big business in those sectors. The problem that I've got with that is it's not a strength if your best businesses are price takers rather than companies with competitive advantages that are sustainable. And so we're on a path, and I say this carefully, but we're on a path to serfdom where we're actually taking a very short-term approach to building jobs in big business without a long-term focus on what's important for Australia. Eventually, we'll have no assets to trade, and we'll be working 8 hours just to eat because we've got nothing left to trade.
No, look, this all sounds like vintage sort of agrarian socialism.
Well, it isn't.
Because, I mean, we've got these big concerns of structural deficit, employment, yes, growth.
Well,
Don't we need investment to fix all that?
Yes, let's talk about that structural deficit, you know, and I don't believe it's structural. I believe the only reason why the politicians like to call it structural is because it's too hard to deal with, and therefore it remains permanent. But the reason why we're spending so much, the reason why we have a deficit, of course, is we're spending much more on our imports than we're receiving for our exports. And why is that? Because our biggest exports are a commodity that nobody really values, and we're just a price taker. What we need to do is we need to set up structures where small business and the market, and I'm saying the market, needs to be able to be left alone to identify the best opportunities in this country, and then the government can start protecting and taking it and start identifying the best businesses to subsidise or help build. And at the moment, what the government's view or mandate is that they're very good at allocating capital, but history says they're not.
It's very interesting, because I thought the chap that I spoke to earlier in the show, Bruce Bilson, Minister for Small Business, was the ambassador for job creation. But actually, Andrew Robb, in this piece in the Fin, has been called Australia's ambassador for jobs. And I'll give you a quote. He says, in my commercial contact with the region, they're all complaining on the return on investment. So many of their projects have tanked because of these changes to government rules. I've even had it from the big banks in China, says Andrew Robb.
Well, who cares what the big banks in China think? You must understand, I'm not suggesting we stop trading. Not at all. We are a trading nation, there's no doubt about that. But for as long as our balance of payments current account is in deficit, for as long as that happens, we will need a current account surplus, a capital account surplus in order to fund that. Now, how do we encourage what do we do to get that money in? We sell our assets, we sell our businesses, we sell our farms. And what I'm suggesting is a better position, a stronger position to be in, is where we're the acquirer. Real wealth is created through asset ownership.
But are we talking about value adding? Because I was up in Darwin last week, and one way to value add, we've got all this ethane coming in from the Browse Basin, supposedly. You could start a petrochemicals industry, but we need cheaper gas to incentivise, or so I'm told. But I mean, that's sort of semi-subsidising, isn't it?
Well, that's sort of second prize, because again we're investing in an industry where we're a price taker, and that's the problem. We need to add value to our exports. That will fix the balance of payments current account deficit, and then we actually don't need to be selling our assets in order to fund it. We would actually be the acquirer. We could be investing overseas.
We have to go back to almost small business, because this is sounding awfully like there's a hole in my bucket, and you end up with a hole in your bucket.
There's some really fundamental things we have to fix. Birdseye and McCain have just moved to New Zealand. Why? Because during the season where they have to work 24 hours a day, the plant needs to operate, New Zealand, the salary rates are $20 an hour, whereas here it's $50 an hour. So we need to fix some basic things. But small business needs to be allowed. You know, we could give them a tax holiday, for example. Singapore offers start-up businesses a $200,000 tax holiday for the first 3 years. You know, we don't do anything like that in Australia, and we should. And that would allow the market to identify the best opportunities and our real strengths.
This is going to be a long conversation. We've got Barnaby Joyce around the place, and it's just going to be a very long conversation. Look forward to talking to you again. Thank you, Roger Montgomery.